is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the June 25th. Wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone's off to a great start this morning. Let's make sure we do all that we can do to have an extraordinary day. My outcome here during the next hour, well, it's to help you to become a better money master and to provide you with tools that empower human potential. Because living up to our potential, folks, that's something you and I, we must master each and every day. So let's begin our day with my favorite empowering belief. It's called become your own electrician, the electrician of your beliefs. The reason is because beliefs have the power to create and the power to destroy. You and I, we've got the extraordinary ability to take any experience of our lives and either create a meaning that disempowers us, one that can just simply stop us from attaining our dreams, or how about one that can empower us and takes us to places we never even dreamed of? Think about it like this. There's only one thing we can control in life, and that's the meaning that we give to something. That is really the beauty of the markets we trade. We've got bulls and we've got bears. One that sees an event as a selling opportunity, one a buying opportunity. You see, it's our beliefs, the meanings that we give to events, to statements, criticisms, whatever it might be. We are the one that's in control of that meaning. And that's really pretty cool when you think about it, because that is awesome power. So what you and I, what we can or cannot do, what we consider possible or impossible, it's not a function of our capabilities. Instead, it's more likely a function of our beliefs about who we are. And that matters because all personal breakthroughs, doesn't matter what level you're at, they always begin with a change in beliefs. And the most effective way to change is to change our blueprint, change our wiring diagram, get our brain to associate massive pain with an old disempowering belief, whatever it is that's stopping us from breaking through. You see, we must believe at the deepest level that belief has cost us in our past, is going to cost us right here, right now, will cost us in the future if we continue with it. And that, folks, that's no way to live. No way at all. That's what's really called the Charles Dickens process. But here's the cool thing. When you get rid of that disempowering belief, you want to replace it with the pleasure of adopting a new idea, that new idea and belief about where it is you really want to go. Because what we know is at at any moment, the decision that we make can and will change the course of our life forever. It could be the very next person we stand in line next to, sit next to on an airplane. Could be the next phone call we take, the next phone call we make, the next movie we see, book we read, newsletter we subscribe to. Any of these things could be the one single thing that causes the floodgates to open, and then everything that you've been waiting for will fall into place. Folks, it is Wonderful Wednesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we've got the Dow trading up 25 points, trading out at 16,842. S&P up about 2 points at 1951. NASDAQ Composite up 2, trading out at 4352. Russell 2000. Off about 64 cents. No big deal out here. You've got gold back up $4, silver down a nickel, light sweet crude off 31 cents right now. Our call number is 877-927-6648. Give us a call, folks. Happy to take a look at your stock chart. So where do we begin the day? Let's start off by looking at the indexes. Let me do this here. I'm going to switch over to different. Actually, let's do this here. Let me put up the Rhodes Momentum trading charts out here. Let's do this here. Let's pull this over here. This happens to be gold. In fact, let's take a look. Well, we'll take a look. I'll come back to gold here. I'm going to go take a look at the other index. Let's take a look at the composite. And this chart here that we're looking at, folks, if you're watching this on Tiger TV, the upper portion of the chart is a weekly chart. The bottom portion of the chart is a daily chart out here. So we can get a snapshot, and this helps us to, because what you want to understand is, depending on the time frame that you're making your investment and your trading decisions, you want to know what's going on one level up, one level down. So if you're an intermediate term time frame trader, you'd certainly want to know what's going on a weekly chart. You want to know what's going on a monthly chart. I don't have that pictured here, but you most certainly want to understand, hey, what's going on? What's all that noise and racket down below on the daily chart out here? Well, if we take a look at the NASDAQ Composite, composite, and I'm going to pull this back just a little bit just to widen it up. The bottom portion of my screen, let me get my crosshair, my cursor out here. If we take a look at the trading session back here on June 23rd, what we saw was a little doji candle out there. Now, a doji candle, that's where your open and close is the same, and then you have a little bit of movement, or could have a lot of movement, to the upside and the downside. You see, it's the body of the candle. It's the essence of price. In this case here happens to be the horizontal line, the little doji candle, and they have meaning up at resistance areas. Now, the Japanese have an expression, and that is when they get a lower close the next day, you've got leaves falling off of the tree. Well, that's what you got yesterday. You also received a message from Candlestick Charting. It's called a key reversal session. That's what also took place. That says that yesterday's high is very important out here. That high, by the way, inside the composite that you want to take a look at, that high is 43.6118. Let me actually put this chart up on my screen here. Give me a moment to, it's going to be from a different charting tool. So I use 3 charting tools out here. I use eSignal, I use Ninja Trader, and I use Ensign Windows out here. All great charting applications and packages. Let's take a look at if we take a look at this chart here. This chart here happens to be the monthly chart for the NASDAQ composite. Now, what we also saw take place yesterday was price get below 43.5569. You're at 43.5564 right now. And that's a real important price point, 43.5569. We've got how many days left in the trading month out here? Let me put up my little calendar here. So we're June 25th. And what does that give us here? Are we going to, so all the way through Monday. So on Monday, if the NASDAQ composite has the strength to close inside 43.5569 on a monthly basis, that offers the actual promise of price going up and testing the highs of March 31st, 2000. Those highs being 51.32.52. If we get a close below 43.55, that'll be the second month in a row. Not second month in a row. That'll be a second month here. The first one was on March 31st. That'll be the second month where price has rejected that swing point. What does that mean? Well, it means it's rejected the swing point. We're most interested in seeing if, in fact, price is going to be able to close inside of that level out there. Monthly chart, there's nothing bearish about the monthly chart. There's nothing bearish about the weekly chart out here. There's no reversal signal on the weekly chart, not as of yet. You'll see that if you're watching me on Tiger TV right now, you're going to see kind of a light blue shaded area. Those are blue skies. That is as bullish as you can get. That's what I call extremely bullish. That is as I can repeat myself, sure, is as bullish as you can get. Now, on the daily chart, down below, you can see we've entered the cautionary zone. So we've entered the cautionary zone. That was primarily a result of yesterday's candle session that closed below the low of that doji candle from the day before. So now it's just a matter of caution on the daily chart, and that's what's going on inside the NASDAQ composite. Remember, we had the NASDAQ composite. Really, it and the Russell 2000 had a fairly significant correction back into the lows in April out here, April and February. Let's take a look at the Dow Jones Industrials on the weekly chart. Right now, it's priced out at 16,860 out here. If we take a look at its weekly chart, still no real damage done on the weekly chart out here. Daily chart, a little bit different story. Level that you need to really watch is the 50-day exponential moving average, 16,662 as we speak right now. But still on a daily basis out here, we're seeing some signs of weakness, but still not anything that is a significant reversal here, not as of yet. You break below this candle session right here from June 12th. That low is 16,703. So you got 16,703, 16,662. That carries with it a little bit different message inside the market. If we take a look at the NDX 100, we're going to see the same pattern that we took a look at inside of the NASDAQ composite. We'll see that yesterday was a key reversal session, also a bearish engulfing, but the bearish engulfing, the body of the candle session from June 24th, just like that doji candle we looked at inside the composite, pretty small, pretty easy in order for the body of yesterday's candle to engulf the prior day's session. Nonetheless, daily chart is saying, okay, we've got a pattern that we need to be paying attention to. Levels of support inside the NDX 100, 50-day exponential moving average at 37.01. I would expect that to be the first level of where we would see if price could actually hold Let's take a look at the New York Stock Exchange out here. New York Stock Exchange giving a big old key reversal session as well yesterday out here. Still on the weekly chart, no real great pain just yet. If we were to see it close below last week's low, that's priced out at 10/8/29.67. That would make your intermediate time frame sphincter muscle go ahead and tighten up. Now, we were just talking about the NDX 100, but let's go out to British Columbia and talk to our man, Rick. Rick, thanks for calling. Thanks for holding. How you doing this morning?
Hey, really good, thanks.
Good, good. You want to take a look at the Qs, so tell me what you're looking at there, how I can assist you.
Well, we talked about this about a week ago, and it looked like the Qs, like the 88 level looks like, is a place where it should go to. Now, is it going to flutter around here for a little bit longer? It could, right?
Yes.
It kind of has an inverted head and shoulder if you use the inverted head of, April 12th or whatever date that low is.
Yeah, April 15th, yep.
Up to the 88 level, you kind of see it there. And
yes.
We finished it almost to a T,
Mm-hmm, mm-hmm.
It's just over $4. So yeah, we went say $5 even, and so we went to 93 and broke 93. So we finished it. It looks to me like, it should pull back to 88 at some point in time.
Yeah, if we take a look at the Qs, what's kind of interesting, in my newsletter for the last several weeks, I've had this specific pattern. If you're watching us on Tiger TV, folks, I've had this specific pattern, which is a 1.272 butterfly. So Rick came up with a projected price using a head and shoulders pattern, inverted head and shoulders pattern, and he was able to come up with so you can see we can use a couple different tools out here, and both of those tools ended with a price projection in the 93.50 area. Price yesterday got the 93.57, so it also completed this 1.272 butterfly. It's an expansion, folks, of the swing point high from March 7th down to the low, this key reversal session that took place on April 15th. Now what took place yesterday, Rick, as it was finishing off the top of that, it also had a key reversal session. And it was very similar in looks. The key reversal session that took place on April the 15th out here was a little doji candle. Most people might not have picked up on it as being a key reversal, but very similar in style and looking to the candle formation of yesterday. And so long as 93.57 does not get taken out, or not get taken out in a close above it, certainly a close above with 31 million shares, then we're looking at a retracement. Now, you're kind of targeting the $88-ish area, and you're doing that because of which bar?
Well,
high volume?
First of all, that's the neckline. But secondly, if you put it like on a 6-month weekly,
okay,
you'll see how we went up on fumes from that 88 level, 88.
Sure. Sure.
You know what I mean?
Hey, Rick, hold on through the break here. Let's get through this break. We'll go back out to British Columbia to our man Rick. We'll take a look at the Qs, and we'll go take a look at a weekly chart on that. 877-927-6648. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 19. S&P is flat. NASDAQ Composite is flat. We're going back out to British Columbia to Rick. We're taking a look at the QQQ ETF. And before we went to the break, Rick had brought up the weekly chart, or mentioned the weekly chart for the Qs there. So on the weekly chart, Rick, tell me what you're looking at.
Well, if we're looking at volume, if you're long right now, and you believe that if you go up on lighter volume, it's not real.
Yes.
Then I think you would have to say the Qs have got to pull back to 88.50, minimum.
Yes. Which, they're trading 92.64 right now, so that would just be, just kind of a normal retracement, really. So not a big. Not a big issue there. The $85 would be a 0.786, $87, 0.618 retracement. So not a big deal there for that would be just a natural move, for it to pull back there.
Yeah.
I know that you focus on the Qs a lot, and I don't know if you've tried doing this. It's kind of an interesting phenomena.
The Qs actually are the cleanest of all of them. That's why I have in the last little while.
Yes.
Like it, as far as volumes go, the volume's been pathetic from the 88 mark. Do you not agree?
Well, no. I here's what I would say on the Qs, and I don't know the answer as to why it works this way, and I don't know if it's hedge funds and it just is easier for them, or I don't know what goes on. But if you go back to March of 2009. Rick, what you'll find out here is one of the most consistent things is that high volume lows, or within a couple days of a high volume low, they actually mark significant bottoms. And I'll just get as an example. As an example, if we go back to the trading session on June 20th, 2013, so we're back now a year. And if you take a look, we had volume come out of the queues on that trading session of 61 million shares, basically. The next trading session was 51 million shares. The next after that was 41 million. Here's an interesting, you had some significant lows down there with volume, and they never got tested again. Price never pulled back there.
I mean, this thing should pull back to 60 if you look at it on a month.
Then, Rick, you can go to the trading session of October 9th, 2013. Massive high volume low, 64 million there, 76.35. High volume lows inside the queues mark bottoms. They mark lows out here. We saw... Basically, like I got a 5-year monthly on this thing, right? Yeah.
And you might as well just throw the volumes right out the window if you don't think we're going to pull back to 60 again.
I think in the queues, I don't think throwing I think not throwing them out. I think that what happens is that in this world here, things change, and so I understand things change. Don't you agree though that the volumes on the queues from the 60 mark, yes,
has been lighter on a monthly chart?
I do, absolutely,
and that's why That's why I'm not saying, like, our last crash was in 87, right?
Yes.
And, if debt is an issue,
yes,
forget about world, out of our control world problems. But if debt ever came back, and it can happen fast. Now, hey, I'm not trying to put a scare into the market or anything. I'm just saying, if you look at the volumes on a 5-year monthly,
yes,
60 is definitely where we should be coming back to at some point in time down the road. Don't you agree? It's been a false break on volume.
I would say, you come back to 58.82 to $49. It would come all the way back down to August of 2011 if volume is the issue. What I've found is that inside the queues, for some reason, they now have a new volume characteristic that is more predictable than the old way that we have used volume. And you will find that the queues make highs or short-term highs with light volume. Now, that's not so new, but they make lows with volume. And when I see these high volume, low spikes out here, it's an indication to me that a bottom is getting ready to form. And until I see that pattern change, I will stick with that as the new characteristic inside of the QQQ ETF versus the way that we have used that in the past. Now, it doesn't work that way with the Dow Diamonds and the ES or the SPY out there, but it does work with the Qs. Rick, I just suggest go back, take a look at the daily chart and go back to 2009 and take a look at all those high volume lows out there. And it may be another way for you to use volume with the work that you do out there.
Thank you very much.
You bet. That was Rick in British Columbia. That was taking a look at the Qs. We'll be right back, folks.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We've got the Dow right now up 25, S&P is up 2, NASDAQ Composite up 80 cents, Russell's off $1.17 out here. And let me go back, and it was a great conversation that I was having, or I thought it was a good conversation that Rick and I were having. And again, it's taking a look at a new personality, a new way to take a look at the volume, but only specifically inside the QQQ. And it's a volume characteristic. See, what I am is a pattern recognition expert. That's what I when I take a look at technical analysis, to me, it's all about trying to identify patterns. Sometimes sometimes you stumble across things. You see, as I went through my skill set of acquiring my love and passion for technical analysis, hey, it started with swing points. It started with swing points and volume. Then it moved into Fibonacci retracements and expansions. It started with the light, and then it went to the lightning bolt pattern of A to B equals CD. Then it went into the astrological aspects of what was going on inside a market, and it was just kind of like a Lewis and Clark, only it was Rhodes and Rhodes Exploration Company, trying to navigate the markets and see if I could find some consistent patterns that were worthwhile for us to pay attention to and trade. And what was interesting, as I was applying different types of astro aspects to charts and found out of their consistency or lack thereof, or volume and swing points and what have you, I came across a tool that actually identified every single market high. It identified prior to a crash taking place It identified that pattern well before it. Just as an example here, because Rick had mentioned the 87 crash. So let me just show you what it is. And this is a daily chart that we're looking at. And it works on daily, weekly, monthly time frame charts out here. Here's a daily chart for the Dow. If we take a look at the Dow and you go back to the trading session of August 11th, 1987, you'll see it made a high of 26.92. Its relative strength reading on that trading session day was 81.87. The Dow goes up and it makes a higher high, a handful of trading sessions later, August 25th, 1987, makes a higher high at 27.47. It does it with a relative strength reading of only 71.92. So a lower relative strength reading. The very next trading session, you get this little dark cloud cover candle, almost a key reversal session. It wasn't. Follow through the next trading session. Starts to form an A to B equals CD to the downside. There were plenty of opportunities well before the actual day of October 19th, 1987, that suggested that if you just simply were a person that used stops, okay, you can, if you've got a money manager out there and you've got other folks, they're going to tell you don't use stops. Those folks are absolutely crazy. How can you not? You realize how hard you work for your money. How can you not protect it? How can you not protect it? You've got to protect it. You have to have something other than a mental stop. I don't care if it's 10%. That's fine. I don't care what your stop is. But you have to have a point. You have to have a point, and you need to do it when you are most objective. And right now, where markets are at highs, you're more objective with regard to what kind of pain it is that you would take to the downside. Don't repeat these mistakes out here. This is unnecessary. Have some kind of stop. I'm not saying you need to short the market. I am saying you can get out of the market and you can avoid all that pain, and you can do what all of the folks that have money do. If you take a look at what's going on inside of the markets now with all the consolidations and so forth, all you're looking at is folks that are using money to buy assets to a certain extent cheaply. Whether they're using debt, like Rich had mentioned, there was a company, I don't recall who it was, Monsanto maybe, that's out there buying back stock, and I kind of said, hey, they're buying back stock at highs. What's the deal there? What the heck is the CFO thinking? Well, what he's really thinking is, hey, I can go borrow money at 3%, 4%, 5% or what have you, and I can buy back stock. And I can push it up more. So he's doing a math equation out there. That's all about. But let's come back to the 87-ish crash type area out here. I can go back to 1929. We'll see the same pattern. I can go back into the 30s and 40s. You'll see those same patterns. Now, the reason why I bring that up is because it's really what we're looking at today. But you need to see it take place on more than just a daily chart. Something else, there's another pattern out here. As I was flipping back to 1987, I'll show it to you right here. And just take us back into the 1990s now. August 2nd, 1990, when the Iraqi forces attacked Kuwait. Now, I think Tom and David White have talked about the Egyptian stock market and how it's down 20% or what have you, and is that going to be a contagion that passes through to the U.S.? Now, since let's look at it like this. It's not political or anything. It's not about politics or religion or anything along those lines. What we do know about the Middle East is they've been fighting forever. Over land, over religion, whatever it is. That fighting's not going to stop. These guys that are trying to move forward, they're not going to stop. And they're going to fight. If you fight against them, they're going to fight too, right? They're not going to just say, hey, okay, I guess you guys are serious, I'm backing off. Not a chance. Now, what happens during military conflicts out here? Well, it's really during periods of uncertainty. What happens during periods of uncertainty, and interestingly enough here, if you take a look at a high that was put inside the Dow back on June 5th, 1990, it was up at 29.57, relative strength reading in the 77 range. It made a higher high, little doji candle back here on July 17th, 1990, and did it with what? Less relative strength. Makes a high, less relative strength, little doji candle, leaves fall off of the trees the very next session, meaning the price was moving lower out here. And then what happened? So ahead of time, before the Iraqi forces attacked Kuwait on August 2nd of 1990, was already an indication that prices were going to or may likely fall out here. So take a look at this. Take a look at this, folks. When you have uncertainty in the market, okay, and these forces, they're about, so this is Iraq forces attacking Kuwait. What's going to happen if it is at Baghdad falls or, here's what we just need to pay attention to. There are patterns. As a recognition expert, The moment of mass uncertainty when it enters the world market out here, what you can expect to take place inside the stock market is a move lower. In fact, if you take a look at, you come back to August 23rd, 1990, when the U.S. Reserve Force were called to active duty, you saw the market bounce a little bit. Why? Because of the promise of the potential of the end of the conflict. But that was just simply reserve forces being called to active duty. Uncertainty leads to selling in a marketplace. Certainty, or the promise of the future, leads to prices moving higher. And that takes you to Operation Desert Storm back on January 16th, 1991. And that is a gap, and that gap has not been filled out there. You hear Larry Pesavento talk about that all the time, about that gap out there. This is what happens with regard to military conflicts. The market gives us clues. When the market makes higher highs, does it on less relative strength, it is a huge clue out there as to what to be looking for. I can't tell you what's going to happen tomorrow, but I can tell you what happened yesterday when we take a look at the stock chart. And what happened yesterday, and let me now try to get all the way back if I can here. We'll take a look at what happened in the Dow yesterday, the day before. Let's go see what we have. Now, the Dow itself didn't make a higher high with less relative strength. Because the high, well, maybe it did, just slightly out here. Not much. The actual high here on June 9th was 16,970. The high here from a few trading sessions ago was 16,978. So a slightly higher high, doing it on less relative strength out here. But it's really the S&P, New York Stock Exchange. We have a number of other indices that were making higher highs. We're doing it on less relative strength. Did have reversal signals out there, such as the S&P 500. And it says we just simply need to be aware. You've got the signals that are out there. Way better than any moon, full or new. Way better than any set of astro aspects that I've ever taken a look at with regard to consistency out here is this specific pattern. It's why when we took a look at on the first show, and it works on all different time frames, we took a look at the 30-minute chart out here. 30-minute chart. Now, there's a reason why we're seeing a bounce in the markets today. I knew that we would see a bounce in the markets yesterday when the markets closed. My subscribers, longtime subscribers, know, and they looked at it too. So I got some emails from folks saying, hey, are we going to bounce? And the answer was, hey, we have a 70% chance of bouncing today or tomorrow, meaning Wednesday or Thursday, because of what the market actually did yesterday. Does that mean that the move lower is over? No. The question is, we're going to see a bounce, and the question is, where are we going to bounce to? The move that we've seen thus far could, in fact, be over. I don't know. I don't have a signal here yet that says that it's over with, but it's about taking a look at these different patterns out there. And that includes the volume. That includes volume inside of the QQQ, which makes, on a daily chart, we can take a look at it on a weekly chart too, it makes significant lows with volume. So when does the move lower kind of finish here? When is the next short-term low? Well, I think I just gave it to you. The next time inside the Qs that we see a high-volume day, we're probably within a trading session or two of a significant bounce in the marketplace. And we didn't really have that yesterday at all inside the Qs. We saw a little bit of increased volume, I think, as was coming off of the highs out there, but nothing more than that. So that's a pattern. In fact, if we take a look at the longer-term pattern out here. Let me go take a look at the monthly. Let me go pull that back a little bit further here, because we'll take a look at the monthly patterns. We'll take a look at that price relative strength divergence pattern out here. Let's take a look at the S&P 500, because it's a good one. And the S&P 500, you can see back here at the highs in 2007, the highs in 2000, guess what they were doing? They were making a price relative strength divergent pattern. Price was moving higher, doing it on less relative strength. Now, if we take a look at the S&P 500, it made its highest relative strength reading as we went into the December 31st, 2013 timeframe. The reading got up to 77.63. Yesterday's reading, 77.08. Very close. Very close, but has not taken that out. Now, what we don't have is any kind of reversal signal here. So I don't have anything on a monthly chart that says that, hey, this is the big one. We just have some signs on a daily chart that say we ought to see a market do some retracement. And if it does something else and it takes out those highs, that just simply tells you how strong the momentum is inside the marketplace. But we got plenty of signals on a daily chart yesterday to say that the market wants to pull back. And we could have expected a bounce this morning. that was built into the system, and just simply the way that the rubber band stretches inside of the markets out there. So I hope that this little scenario in taking a look at and just read the signals. And just, folks, just please make sure that you use stops out there. No matter what account it is that you are managing, go take a look at your portfolio, individual stocks, whatever they are, and at least use some percentage. 8%, 10%, I don't care what it is, and automatically if something gets below that, just get out of Dodge, retool, take a look at it. You can always come back in at any point in time, but don't get into don't ride a market all the way down. And if you are in a lopsided position, don't be afraid to go to cash, because don't keep losing your cash out there. In any event, let's take a look at some things that are moving and grooving in the marketplace here. To the upside, you got Pioneer Natural Resources. PXD is the ticker symbol. Big key reversal session yesterday, working out of a extremely overbought condition. Big key reversal session you can see out here this morning, having a little bit of a bounce. Unless Pioneer Natural Resources, the daily chart we're looking at here, you had some volume off of the highs yesterday, but it's got good volume this morning. 1.8 million shares yesterday to the downside, 1.4 million shares to the upside. Pioneer Natural Resources does not want to give it up. It does have the hurdle at it. Let's see if it crossed the a swing point, I should say, with volume. That was on the trading session of October 21st, 2013, 2.2 million shares. When it got up over it, it was doing it with light volume. So it got back up over it. It's now back. It's not even back inside the lower part of its range. It needs to get back below that October 21st high of 227.42 to offer the promise of a lower price out here. That is Pioneer Natural Resource. Let's look at the weekly chart out here, see what the weekly chart shows, see if there's anything significant that we can find here. The weekly chart shows that it was making a high back on October 21st, 2013, the week of 11.9 million shares. Got up over it with 6 million, 5 million. This week here, 4 million shares. So doesn't look like it's a real breakout to the upside. Key reversal session inside the weekly chart also of Pioneer Natural Resources, so long as it closes one tick below 232.50. So it needs to close at least at 232.49 in order for for Pioneer Natural Resources to give you a potential bearish pattern on its weekly chart. Haynes Brands, I think that was a result of a buyout there buying DBA Apparel. Nonetheless, let's go take a look and see what Haynes Brands is doing. Up with some nice volume. This is a weekly chart here that we're looking at. Let's put this over onto the daily time frame. Nothing bearish about this stock chart. So gapping up this morning, doing it with pretty decent volume. Let's see. So this thing had volume at its highs. That was 3 trading sessions ago. That was on June 20th, had 2.3 million shares out there. Up this morning so far with 834,000 shares in only a little over an hour of trading out here. So Haynes Brands looking pretty good out here. Let's look at some things moving to the downside as we speak. What can we look at first? Let's take a look at Valmont Industries. Let's see how quickly I can do this. We go to break here in about 11 seconds. So this is gapping down with volume in the move. It's got a high volume. Here's where so this is where volume works. When price falls out of bed, I know that's what Rick is taking a look at. When price falls out of bed, it falls down to a volume bar. That's what you can see here in Valmont Industries. That's the trading session from April 23rd out there. Volume of 1 million shares. So far today, you've moved into it with 428,000 shares. Ought to go test the low at about 143.02. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 40 points. S&P's up 4. NASDAQ Composite up 4, and I saw some folks inside the Tiger's Den. Folks, if you've never tried the Tiger's Den here at TFNN.com, do yourself a favor. You know, whenever you're trying to elevate yourself to another level, no matter whether it's playing the tennis, golf, trading, whatever it might be out there, it's really key that you align yourself with a peer group. That's how you, with a peer group that's better than the one that you're hanging out with now. It doesn't mean you have to leave friends behind. It just means you need to join some other groups out there. And the Tiger's Den is one of those spots for you. If you come over to the homepage of TFNN.com, you can check out the Tiger's Den for 30 days, just as you can my newsletter service, Mastering Probability, out there. So do yourself a favor, do that. You get to also see all of our charts in HD. So it's another great way to, maybe test your foray and to see if, look, I can remember opening up a chart, looking at it, not knowing what in the heck I was looking at. how could somebody even make anything out of it to understand where price might go to? It's a language out there, and it's a language that we teach here at TFNN.com. We use different systems, but it is a very doable language. So to the extent that you want to take control yourself and learn those languages, we are more than happy to assist you in doing that with all kinds of resources that we have here. But inside the Tiger's Den, I saw some folks talking about fishing. Perch fishing, I think, was what I saw run across the tape out there. I remember as a kid, I grew up in the Detroit area, and I remember as a kid, my father taking me out to Lake Michigan. And, they call it a lake, but folks, it's like the 6th largest lake in the world. And once you start losing sight of shore, which is fairly easy to do on that lake, it's like 120 miles wide or something like that. It looks like an ocean. And I remember going perch fishing out there, and literally had a rod, must have had 10 at least. I'm just not exaggerating. Maybe 10 different hooks on there, and you could put your not the rod, but you could put the line into the water, and after a bit of time, you could pull up 10 perch. We had buckets. Garbage cans, not buckets. We had garbage cans full of perch out there. So much perch and so much fishing, I got seasick. And at that stage, my dad and his buddy said, well, we're not going in. Your only choice is to jump in the water to try to work it off. I could not be more happy when we finally got back to land out there. In any event, as far as getting back to land here, the bounce that we're seeing inside the marketplace today, that is expected. And it's expected because we saw a one-day rate of change inside the VIX index of greater than 10% yesterday. That gives odds of 70% or more that you're going to see at least a bounce within 48 hours. That is all that is unfolding here at the moment. However, you've got a VIX index that is still below the 50-day exponential moving average out here. That is bullish, not bearish. And until the VIX index gets above the 50-day exponential moving average, I say don't spend too much time on what everybody is talking about. And here we take a look at the VIX. You can see it went up and it tested the 50-day exponential moving average at the open here this morning. That was up at 1237. It actually got up to 1233. Right now, today, 1237 is the number. Now, the bounce that we were expecting is taking place. Does it mean the bounce has to last all day long? No, it does not. But the morning session here and what's taking place, that was to be expected. Since we're so close to the 50-day exponential moving average, if you want to know when to go ahead and pile on, if you see that VIX today close above 1236, or maybe it's tomorrow, and the 50-day may be just slightly different. If you do see it close above that, I can tell you want to be on the short side of the trade until that VIX index gets back below the 50-day exponential moving average. It is Wonderful Wednesday, folks. Thanks so much for joining us here at TFNN. Stay tuned. Our man Basil Chapman is up next. Then we got Larry Pesavento, Daryl Martin, David White, the Tom O'Brien Show from 4 to 6. Have a great Wednesday, folks. Look forward to seeing you soon.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.